Breaking news. With Outsurance, you always get something out. News Leader, proudly brought to you by Outsurance.
South Africa's 10-year government bond yield eased to its lowest level since March 2015, signaling investor optimism ahead of the 2026 budget. And joining me as we get greater insight on the action in that market is Vishal Rama, Quantitative Analyst at Prescient Investment Management. Vishal, thank you so much for your time today. And let's start there, right? Talk me through the kind of action we're seeing playing out in the bond market ahead of the budget, particularly what we saw playing out in the auction today.
Sure thing. Thanks for having me. So, yeah, I mean, as you mentioned, right, 10-year bond at this point in time, really strong. As you know, last year at like 10.5, now at sub 9%, which is absolutely great. And today at the auction, again, I cleared around 3 to 4% through 3 to 4 basis points through the initial yield gain into the auction. So really another strong auction that we've seen. I think market just sort of preempting hopefully a positive budget tomorrow and taking advantage of that non-comps that are on offer to get the yield at better rates.
And in terms of the positivity we are seeing when it comes to bond markets ahead of the budget tomorrow, I'd just like to get a sense on who's actually snapping up these bonds. Are we still seeing foreign investors really piling into the local bond market?
Yeah, so I mean, so the latest numbers for this month obviously haven't been published, but that number is slowly creeping up over the past few months. I think it's sitting around 27, 28%, where previously at the beginning of last year it was around like 20%. So it's picked up ever so slightly through the year, incrementally. I mean, as you know, we chat to the various participants in the markets, you know, foreigners are definitely liking South Africa as a whole. I mean, when they want to put on EM risk, they obviously rank us among our various counterparties, and South Africa seems right on top there, right? So they definitely are liking our bonds, and they have been participating in the auctions on a weekly basis, and great.
Listen, I'm not mad at that. It really is a good position to find ourselves in. Let's zoom in further on that budget taking place tomorrow, Vishal. There's so much optimism around the budget, so much so that some economists are even pricing in ratings upgrades. Do you expect to see change when it comes to those rating agencies moving forward?
Yeah, so I mean, as you rightly mentioned, right, there's a lot of optimism going into the budget tomorrow, and it seems to be across the market that is the view. I think that in terms of the rating agencies, so no, I mean, we obviously want to go back into investment grade. That'll take 2 to 3 to 4 years. I'm not exactly sure on the exact timelines on that, but that'll take a couple of years to materialize. But definitely, rating agencies are seeing us in a positive light. I expect come the next session when these different agencies come along, they'll put us in a more positive space. So yeah, it's one to watch, and definitely I think we are heading on that right trajectory, hopefully towards investment grade in the next few years. But yeah, and which will be great, right, for markets and
Now, while there is calm in, you know, all assets, that being the bond market, that being equity markets, and we also are seeing a steady rand today. Are there any specific fiscal risks or policy announcements within the upcoming budget that could perhaps trigger a negative impact?
Yeah, for sure. That is always the thing in the back of our minds that we're always wondering. I mean, always seems great, and then there's maybe one exogenous announcement that's made. I think in particular in the budget, you know, I think as long as there are no additional sort of fiscal slippages in terms of crazy spending on something that's completely not normal, I think it should be an okay. There shouldn't be any crazy shifts in the towards market. I think what we're seeing particularly, I mean, budget, hopefully there's nothing crazy about that. But hopefully beyond that, I think geopolitically it's something we're watching quite closely to see how that unravels. Because, you know, a lot of the way we deconstruct yields, we find that global terms drive South African markets generally the most. And so if we see some more exogenous geopolitical tensions rising, that can cause a spike in yields. But as you already said, a really positive outlook with regards to the budget tomorrow. And so, yeah, we wait and see how that pans out.
And just how much are global factors influencing bond markets at the moment? I mean, you look over at the US, there is a bit of volatility playing out there on the back of those Trump's trade policies after that US Supreme Court ruling. On the other side, there's also those US-Iran tensions flaring, but that doesn't seem to be filtering through that much to the bond market. Is it just a case of, I guess, a lot of good news back at home?
Yeah, look, I would definitely say good news back at home, but I think that maybe the market is just saying that, taking a bit of a pause and just trying to digest exactly how it's going to pan out, right? I don't really want to get too much into technicalities around the US and with regards to Iran, but I mean, if a war were to blow out, and I think we would definitely see a spike in yields from current levels. I think that, I mean, our main piece is that a lot of what happens globally is mainly what drives bond markets. So definitely, if war were to ensue, we expect the yield curve to shift higher, rand to sell off, and wouldn't be great for our market in general.
All right, let's leave it there. Vishal, thank you so much for your time and taking us through markets action over in the bonds scene. That was Vishal Rama, Quantitative Analyst at Prescient Investment Management.
Breaking news. Switch to OUTsurance Business Insurance and get a 20% discount. News Leader, proudly brought to you by OUTsurance.